With nearly 35,000 stores, nobody does coffee better than Starbucks. And during its most recent Investors Day, the company announced a new CEO and a plan to supercharge its growth over the coming years. Financial pros took notice, making it the #1 searched for coffee stock on Trackstar over the past month. Now, we all know who Starbucks are. They're widely regarded as the world's leading coffee shop. And at the end of Q3, stores in US and China made up 61% of the company's global portfolio. The company is also seeking to deepen its relationships with its customers through its Starbucks Rewards loyalty program, which in the US has 27.4 million active members. And despite economic headwinds, the company delivered record-breaking revenue in Q3 this year. Now, looking back a bit, from 2016 to 2021, Starbucks revenues have grown impressively. The firm, however, withdrew guidance despite 2022 looking like being a record year. One thing that concerns investors is the heavy debt the company carries, much of which is tied to its property and assets, which total $14.4 billion after depreciation. But the firm did raise its quarterly dividend to 53 cents per share. Now, Starbucks trades at a PE gap ratio of 25.3x, and that's notably lower than its 5-year average of 49x. And while it doesn't have direct competitors, several companies make and/or serve coffee, and they have similar performance metrics. And similar patterns can be seen with the price-to-sales ratio too. Starbucks also has a gross profit margin of 27%, which is notably lower than its peers. But looking at growth, Starbucks is on a hot streak, growing revenues by 17.9% year over year and EBITDA by 16.6% over the same period, and this vastly outpaces its peers. In our opinion, this is an 8 out of 10 ranking stock. The firm recently announced a new CEO and has put together its reinvention plan to accelerate earnings by 15 to 20% annually over the next 3 years. Shares are down 23% year to date, but investors should be scooping them up on dips. It's the leader in its category, and it's in a business that faces less uncertainty than most. And while technology may change 5 years from now, people will still be drinking coffee. We like Starbucks and would be a buyer of dips.